Good evening. We're going to do the watch list for the week of the 13th of April. I wanted to wait until later on in the evening until the futures opened, and they're down right now at 28 points ES, so that's because of the OPEC news and stuff like that. So it opened, gapped up, then it dropped. It was down like 50 points at I don't know, 15 minutes into it. Then it started to bottom bounce a little bit. So who knows where it is now, where it's going to be in the morning. I mean, it's 29 points down now. It could be green tomorrow. I would expect this week to be a lot like last week. The Fed's going to pump their bullshit into the market and just keep pumping money and money and money. And I would just trade accordingly and be cautious and stuff like that. I got a bunch of tickets to look at. I'm not going to say if they're bullish or bearish, because right now it's all depending on what the Fed's going to do. The numbers for the coronavirus are getting worse, but the market doesn't care. The unemployment rates just keep going up, and the market just doesn't care anymore. It's become immune to anything coronavirus anymore. So it's all about the Fed and the Fed pumping all its money, which I have no idea how it's getting all the money or where it's all coming from, but they're just going to continue pumping money into the market until something happens. I don't know. We'll just see what happens. And first thing I have up is BIDU, and BIDU has been chopping around for the last week between the 95 and 102, 103. So I mean, it's got like a little head and shoulders right here. So if the market, this is assuming the market is bad. If the market's bad, then I would watch it under 96 for it to close the gap to 90, to even down here into the 85s, but that's going to be depending on what the market's doing. And another one is BA. I where did that go? Oh, sorry. I was typing the ticker and I don't know where it went. BA is in a critical junction. I mean, you get like an ascending wedge right here on the 4 hour in the middle, 1 hour on the left, daily on the right. And BA is one of those stocks that it gets bad news, it goes up, it gets good news, it goes down. So it's very tricky. It's very bipolar. So we'll watch BA this week for this area right in here, the 155 to 160 area, and see which way if it decides to go up or down. I mean, on the daily, it's rejected the 20 EMA twice, which is the middle Keltner channel right there and right there. Actually, this is the third time, gapped up over it and rejected it. So it could go, but it's kind of got like a cup and handle going. So if it gets up into the 165 area, it could take off. So, but that's going to be dependent on what the market's doing. So we'll be watching that. Another one to watch is WHR, which is Whirlpool. If anything, I like this on the short side, under 102 for a short to fill the gap into the 80 range. I mean, it can come down here and find support at 95 and then 91, but I would look for a gap fill. On Whirlpool, earnings comes out this week. It's going to be all about the banks. Everyone's going to think that the banks are going to be bearish. I think the banks will actually do pretty good because they're making money. I mean, they're making fees. People are using their debit cards. People are using their Visa cards. They're making money. Regardless of how bad the situation is, banks are one of few that's going to probably have good earnings. Them and like the FANGs, like maybe Netflix, Facebook, Google, Amazon, they'll do good because they're internet-based to tech companies, and Walmart will probably do good. Target might do good. Dollar General, Dollar Tree, or Dollarama, whatever the other one is. Yeah, Dollar Tree. They'll end up doing good. All the retail ones that are still open right now that are considered essential will probably have really good earnings. So those will probably be the only ones that'll be strong or even somewhat green. The rest are going to get clobbered into the ground. So Whirlpool, I mean, I like it under 102, like I said. Triple M, this I'm not quite sure. I mean, they make the masks. They make a lot of things coronavirus related. So under 1 46 could be a short to fill the gap, but it probably will bounce right here on this red line, which is the 10 EMA on the daily, which it's a daily. These moving averages right here are daily time frames, not the intraday hourly. So it likes to get, when it gets underneath the 10 EMA, it likes to bounce up. So I would look for a pullback to the 10 on triple M. They're still needed. EA is another one. I mean, EA is it's games, and gaming is big right now because of everyone's home and then nothing to do. So if it does pull back, I'll watch for it under 104, actually under 105, and I'd probably pick it up into the, I don't know, the 99 area. If it gets under 100, it might be worth looking at. If the market's really bad, it could sell off and it could get down into the 90s. So that is depending on what's going to happen with the market. Cat is another one. I don't like trading cat that much because it always seems to get me, but it just keeps its riding this like rising wedge right here on the daily. So if it does break under 120, it's going to end up falling apart and going down to probably into the 105s or even into the 110 area. So I would watch Cat. I can't imagine they're going to have when their earnings is, but I can't imagine it's going to do well. So Cat is one I would watch. Would get rid of my lines for a short if the market's weak. Now Walmart has something interesting. It has a hidden divergence right here in the daily. I'll blow it up so you can see. See, they're right here. This high is higher and this high is low. So you get a lower high, but as it's making a lower high, the histogram is making a higher high. So that's called a hidden divergence. So I would watch Walmart to fall apart. For some reason, when the market is green, Walmart's red, and when the market's red, Walmart's green. So it's kind of like it's working like a TVIX. So I would watch Walmart. It does have a short side hidden divergence. I'd watch it on the short side, if anything. If it's weak, Johnson & Johnson is another one. Same thing, Johnson & Johnson's just a huge rising wedge right here. So if it does get under 140, I'd look to short that. So I like it under 140 for a short to fill at least the gap, to even come down into the 127 area. The other one I have is WeDay. Now I'm assuming that all the tickers I'm picking are going to be priced decently, and they're also going to be not have nasty wide spreads. Like last week was pretty good. Last week it was very decent, but the weeks before that have been horrible. So you've had to pick stocks that had somewhat decent spreads and priced pretty decent, and you had to work on those few tickets that actually fit that criteria. But last week there was a lot more tickets to work with because the prices were better and the spreads weren't as nasty. So hopefully this week will be the same. But I would like WeDay under 144 to probably come down and test the 130-34 area on WeDay. So I like WeDay for that. So we'll keep an eye on that for short. The other one's Home Depot. Home Depot I like for a short because I know it's got like a cup and handle right here on the 4-hour and on the daily, but they closed their stores. I can't imagine lately. Just when stores get closed, they just end up going green, and I have no idea why. It's so stupid. They're not making any money. They have to pay all the rent, pay their mortgage, and pay the bills to keep the stores open. So it's costing these big companies like millions of dollars per day to stay open, but yet the stock keeps going up and they're not bringing in any money. So it's just stupid how this is going out. But I would watch under 200. I'd be watching Home Depot to fill a gap into the 180. So Home Depot I'd watch to close the stores. So there's no reason for it to keep going up, but this market's been pretty crazy. Stupid things happen, bad news happens, the market goes up. So just have to play accordingly. The last one is Disney. Disney just looks like a good short because they're getting more subscribers, but their cruise lines are down, their theme parks are down, their earnings is probably going to be horrible. So there could be an earnings run up, but
I highly doubt it. If there is an earnings run up, it's going to be a good first short on earnings day. So I would watch Home Depot under 103.50 for it to fill the gap, to even possibly come down here into the under 100, down into the 96 area again. So I don't have much confidence in Disney. I don't think it's going to go anywhere. They just put news up for subscribers, and it sold off on Friday. So I think it's the sell. It's going to continue for Disney. So that's going to be pretty much it for the watch list. So hopefully that helps, and hopefully I'll see you in the room. See ya.